China's trade surplus rose in June, but the economic slowdown continues to be a worry. I'm Isabella Steger, and you're watching Asia Today. I'm joined by Aaron Back. He's our Deputy Bureau Chief in Beijing. Aaron, tell us why the markets seem to not be liking this news that China posted a trade surplus, even though it seems like it would be a good thing.
Right. So the trade surplus rose sharply in June, but the reason is that import growth slowed dramatically. So that's actually quite a negative sign for domestic demand in the Chinese economy. And what the markets are concerned about is that China is no longer going to be the support to the global economy that it has been for the last few years. If they start importing less goods, that's definitely bad news for people like Australia, commodity exporters like Brazil, and so on.
Okay, you talked about imports, and how have exports been holding up given the situation in Europe and also the US not looking like the recovery is quite picking up yet?
Right, so exports are also slowing, just not slowing as much as imports. So that's why the trade surplus is actually rising. If you take a more detailed look at it, exports to the European Union have fallen. They've fallen 0.8% if you look at the first 6 months of the year. But exports to the rest of the world are doing better. Exports to the United States were up 13.6% in the first 6 months. Exports to Japan were up around 8%. So you're definitely seeing these sovereign debt troubles in Europe are having a big impact there, but not so much in the rest of the world. And in fact, the United States has now surpassed the United States has now surpassed Europe as the top market for Chinese exports, which is quite a landmark.
Okay, we've seen 2 rate cuts recently in China. What else can the government do to stimulate the economy now that they've already done monetary easing in such close succession?
Right, so we have seen a lot of monetary easing recently. There could still be more, but perhaps not immediately. I think there's still a lot of room for fiscal policy to step in and stimulate the economy. There's a lot of chatter about possible tax cuts, increased spending on things like infrastructure. So I think that's the most likely right now.
Okay, and on Friday, the all-important Q2 GDP number comes out. I'm sure we'll check in with you again. But for now, what sort of predictions do people have for that figure on Friday?
So in our poll of economists, we got expectations for about 7.6% growth in the second quarter. That's a pretty substantial slowdown from 8.1% growth in the first quarter. Still not disaster level territory, but it is the slowest growth since the global financial crisis. The government's official target is for 7.5% growth, but in reality, these targets are more like floors. It's more like the minimum they'd be willing to see. So now that growth is slowing to around that 7.5% level, you're seeing them step in with interest rate cuts and things like that.
Great. I'm sure we'll check in again on Friday when China's Q2 GDP comes out. Thanks. That was Aaron Back in Beijing.